Hey everyone, welcome to the Guiding You Forward podcast presented by Mountain America Credit Union. Today we're talking about refinancing your mortgage. And thankfully, Nanette Gravitt is here with us. Hi, Nanette.
Hi, Kristalina.
And she's going to tell us all about refinancing. So I hear this term being thrown around a lot. Hey, I just refinanced. My mortgage is, my monthly payment's way lower than ever. What exactly is refinancing? Is it getting a second mortgage on my home? What does that look like?
So typically when people are talking about refinancing, they're taking your current first mortgage, that mortgage you used to purchase the home or the mortgage you currently have against the home, and rewriting the terms to lower the interest rate.
Okay.
So there's a lot of things you can do when you're refinancing. A lot of people go immediately to the interest rate. That's a really common thing, especially in this low rate environment. But maybe you originally bought a home on a 30-year mortgage, and now you realize, oh, I've been in the home for 7 or 8 years, and with this lower rate, maybe I can go to a 20-year or maybe go to a 15-year mortgage instead. And so not only am I lowering my interest rate, maybe I'm also going to shave time off the loan and save myself a lot of money and get the loan paid off sooner, which how great would that be, right? To not have a mortgage payment at all.
That would be amazing.
Yes.
Then we can, maybe travel again one day.
Yeah. Another thing that a lot of people are interested in with refinancing is maybe they have taken out a second mortgage and they'd rather just combine those into one loan. And just have one payment. So that can be an option. That's called a cash out refinance, where you're taking out additional money. Some people use it for debt consolidation to pull some money out to maybe pay off some high interest rate credit cards or other things like that. Maybe you want to do some renovations to your home. You want to set aside a little money. You want to put on a deck or redo your landscaping or something like that. So getting some cash out of your home is sometimes what people are interested in doing with a refinance as well.
Okay, so would you say those are the top reasons that someone would refinance? Maybe to make home improvements, consolidate debt?
Lower interest rates.
Okay.
Yeah, a lot of those are the big ones right there. Why people choose to refinance in the first place.
Okay, awesome. So let's talk about those terms a little bit more. Would you say it's better for me to refinance and have that start over that 30-year, term again? Or obviously if I go into a lower term, that's awesome because I'm going to pay my mortgage off sooner, but my payment's probably going to be higher, right?
Right. It's a very personal decision on what you do. And really the best thing that you can do when you're refinancing is to look at different options, different scenarios. So maybe you want to lower the interest rate and kick your loan term back out to 30 years. Maybe that makes the most sense with your financial plan. Maybe you're really dedicated and you know that you pay extra each month, but you want to give yourself the lowest possible payment just to be safe.
Okay.
Right? But maybe you say, I'm not really good at making extra principal payments, but I really want to pay my mortgage off in 20 years. So I'm going to go into that 20-year payment and I'm going to make that payment every month. And that might be your strategy. It really depends on where you're at and how long you have to pay that off. Depending on your financial goals, let's say you are closer to retirement or a different change of life, maybe you do want a shorter term rather than going with a longer term.
Okay, awesome. Love that. When we look at refinancing again, how do I determine, obviously rate environment makes sense, rates are super low, but how do I determine when is a really good time to refinance? Is it just when I need money?
No, it could be. That could be one reason that you would do it. It's interesting because I'm working mortgages and I see these low rates, and sometimes the last person I think about is me, right? What should I do personally? Yeah. So sometimes you might see an ad pop up from Mountain America and you go, hey, I wonder what I think about my mortgage and what I should be doing. But if you think about it, you really should run some different numbers. We have a really awesome rate calculator on our website.
Okay.
And so you can put in some different scenarios and kind of look and feel? What is that going to be like if I decide to refinance at this rate or this rate? You know, what makes the most sense? A lot of times people, when they're refinancing, they want to drop their interest rate by at least a point.
Okay.
That's kind of been a rule of thumb for a long time, but that doesn't always play completely true if you're changing terms or if you're adding cash. So those are some different variables that would come into play.
Okay. So you mentioned lowering my rate by at least a point.
Mm-hmm.
Why has that been something that we always are kind of a hard, fast rule that we look at?
So one of the biggest things is mortgages have costs to actually put them together. It costs money. So
Yeah.
you have to have an appraisal. You have to get updated title insurance. There's some different costs that go into that. So to make sure that those level out and it's worth it for you, that's usually been the rule of thumb.
Okay.
It's kind of just to take into consideration the costs.
Okay. Makes sense. Now, one thing that I've heard of with mortgages and refinances and all of this is amortization. How do I say that word?
Amortization.
Yes. What does that even mean?
So basically, that is if you decide that you want a 30-year mortgage, it takes a look at how your payments work through the entire 30 years, all 360 payments,
Okay.
and how much goes to principal and how much goes to interest. And so when you look at the very beginning of that amortization table, you're going to see that when you make your very first payment, most of that is going to pay interest.
Ugh.
But every single time you make a payment, that slowly starts to shift. And then there
Okay.
comes a point when you start paying more to principal and less to interest. And that has to do with the balance that you have on your loan.
Okay. So is it true then if I pay more to principal up front, I'll lower that mortgage overall?
Yes,
Okay.
the interest. So anything you can do to reduce the balance is going to have an impact on the interest you pay.
Okay.
So we talked a little bit about last time, how do I pay my mortgage off early? And that's one of the strategies, right? Paying a little bit extra to principal, either every month or even an extra payment every year. That can shorten your term. By shortening your term, you're shortening the amount of interest you pay. And then by lowering your term, you're shortening the amount of interest you pay on each payment.
Okay. Totally makes sense. I love that. So when we look at terms and refinancing, when is it really worth it for me to switch to another term? I mean, obviously it's going to be a case by case basis, but if I came and sat down with you, Nanette, and I said, I've been in my mortgage for 8 years, I don't really want to get another 30-year loan. I've already paid off 8 years
Right.
worth of it. I mean, at what point do you say, yeah, you're right. Let's not extend that another 30 years. You're going to be 102 before you pay that off.
Well, I think that the role of a mortgage expert is to help lay out options and help you make that decision.
Okay.
I think that if you could get a lower interest rate, if you've already paid for 8 years and you could lower your interest rate, and even if we could move you onto a 20-year, you're probably not going to pay more. That's the easiest way. What can I lower my term to, lower my interest rate to? How much can I save without having a lot of impact to what I'm paying now?
Okay.
But I might also ask you questions. How much do you typically pay on a monthly basis? If you say, well, I consistently pay an extra $100, then that would probably go into helping make that decision of what you can do. If I could say, hey, if you can pay an extra $150, we can put you on a 15-year. How appetizing is that?
That sounds awesome.
Right.
Yeah. Then I won't be 102 when I pay off my mortgage. So that'd
Yes.
be good. That'd be good. Well, thank you so much, Nanette, for joining us today.
Thanks,
and we're
Crystal.
excited to see all of you on our next episode of Guiding You Forward.